It's funny how life has a way of just coming along and just kicking you right in the balls. So yesterday, there I was, 3 or 4 months into my retirement, just cruising along, absolutely no problem, when suddenly, out of the blue, I get a £5,500 tax bill from the government. And this is based on my tax last year, which was all pay as you earn, and therefore all my tax is paid through my payroll. And yet now, all of a sudden, I apparently owe them £5,500. And the reason for this is there's a slight tax anomaly in the tax system that not a lot of people know about. And so I'm sharing this salutary tale, so hopefully you won't be caught out, or at least you'll be aware of it. Okay, so here's some context. So last year I was in full-time employment, had a regular salary, all the taxes sorted via pay as you earn, therefore from my salary, payroll takes the tax according to how much I'm earning. Simples, no problems. If you watch my channel on a regular basis, then you'll know that I decided to take early retirement. And I was able to do this because I was offered redundancy last year. And based on the fact that I'd worked for the same company for a good sort of near 20 years, the redundancy package was quite healthy and it allowed me that opportunity to retire early. It was going to be tight. It was going to require a different way of living, a different lifestyle, be a bit more frugal, but the maths seemed to work out. Now, as I said, in order to achieve this, I did all my own calculations, worked out all the tax, all of that, no problems. I'm not a tax expert, and none of this, of course, is tax advice. It's just a salutary tale for you to look out for. And yes, I ran the figures that I'd done in order to kind of work out whether I could achieve early retirement. I ran those figures for a financial advisor, and their response was, yeah, that looks good. Probably the best route to take. Now, I'd, done through a number of different approaches and calculations to get to this final position, but my tax advisor, my financial advisor, basically said, yeah, if I was in your situation, I'd make those decisions and your calculations seem right. So great. What's to worry about? So I took the plunge and I've now been retired for the last 3 months or so, nearly 4 months. And yeah, it's fine. I'm adapting to the new lifestyle. I'm adapting to, having less money in, but I've cleared a lot of debts away. So yeah, all good. But yesterday I get a message from the tax office saying, oh, we've taken a look at your earnings for last year. Bearing in mind, pay as you earn. So it's all my taxes are paid through payroll. We've taken a look at your earnings last year and we've worked out that you still owe us £5,500. So you can imagine my shock, and my immediate reaction was, surely some mistake. Yeah, I'm not under self-assessment. My tax is paid through my payroll. It's pay as you earn. So how come I'm in this situation in which I now owe £5,500 on last year? It doesn't make any sense. And here is where the anomaly kicks in. Now, I'm not going to go into the exact figures, but that doesn't matter. What matters is a key figure here. Bearing in mind I'm taking redundancy and I'm getting a big lump sum. All you need to know is that my salary last year, I earn less than £100,000. Okay, that's all you need to know. Doesn't matter how much less. The point is, it's less than £100,000. That £100,000 mark is the key thing in this anomaly that exists, and not a lot of people are always aware of it, because not a lot of people earn anywhere near £100,000. So why would they be aware of it? Why would you need to be aware of it? Now, I am, of course, aware of the different tax bands. Of course, that's just normal. So let's have a quick look at the tax bands to help us understand what's gone on here. So here we are on the government website, and here are your tax bands. Okay, so we have a personal allowance of £12,570. So your first £12,570 tax-free. I get it. Lovely, sweet, not a problem. Okay, so personal allowance, £12,570 tax-free. Then you pay the basic rate of 20% on everything you earn between 12,571 to 50,270. Fine. Now, for the benefit of the audience here, the benefit of the jury, yes, I was earning more than £50,000. So for every pound that I earn over £50,271, I was paying it at 40%. No problem. I don't have a problem with the tax rates. And if you're lucky enough to earn more than £125,000, then everything over that, you pay at 45%. Great. So every month I would get my salary and go through the payroll, and they would go, okay, we hit your personal allowance, 12,570, 20% on everything over this and 40% on everything over this. And this is what you're left with. Here's your salary. Fine. Every month. So going from the tax year, April, all the way through to March, paying my tax. Brilliant. Not a problem. So then, as I said, by the end of the year, I decided I'd take voluntary redundancy. Now, the nature of redundancy is it's a company trying to reduce its payroll. In order for that to make sense, they need to make sure that they write off all that redundancy as sort of, bad debt, or at least write it off in that tax year. So they are really keen to make sure that if you are being made redundant, you get paid your redundancy in that tax year. Because the following tax year, they don't want anything on the payroll. That's the point. They're trying to save money going forward each, financial year. So in that financial year in which the redundancies are being made, they want to take the hit there so they don't take the hit going forward. So I get my redundancy, and obviously it's a big lump sum. So on March, my payday in March, it's a big fat figure. It's around £90,000, right? Whoopee, right? So I'm getting all my redundancy, all my bonuses, all my long service leave, all of that, plus a little bit of last month's salary, everything, right? Great. Now, I realise that takes me above 100,000. In fact, it takes me, for the year, it takes me over 125,000. So I wasn't expecting to earn anywhere near £100,000 plus, but because I've taken redundancy and it's a big lump sum, my total earnings take me over the 120 odd thousand pounds. Fine. I get that. I understand. So that means I'll be paying 45% on some of that total figure. Now, the thing about redundancy is £30,000 of it is tax free, which is great. I'm getting £30,000 tax free, but everything over 100,000, I'm paying 40%, and everything over 125,000, I'm paying 45%. Great. Payroll all sorted out, all the tax done, sorted. Here's your money. Off into the sunset I sail. Lovely. And then 4 months later, I get this bill from the tax office saying, we've taken another look at all the tax you paid last year through payroll, and you owe £5,000. How come? Surely some mistake. No. Now, here is where the anomaly is. If we look here, it goes here. Your standard personal allowance is £12,570. Okay, so that's your tax-free amount. If you earn more than £100,000, your personal allowance goes down by £1 for every £2 that your income is over £100,000. Okay, so don't worry about that. It's complicated, but basically what that means is if you earn £125,000 or above, you lose your personal tax allowance. Yeah? So if your earnings are greater than £125,000, you've lost your £12,570 in personal tax allowance. And that is basically what's happened. Every month I've been paying my tax through the payroll, or so my company has been paying my tax through the payroll on the basis that I earn less than £100,000. And therefore, I've had my personal tax allowance, my 12,570 at 0% is taken into consideration. So every month, that's the calculation, yeah? I've got my personal allowance, personal allowance, personal allowance. Absolutely no problem. And then come March, when I get my redundancy and my last pay packet, sure, some of it is paid at 20%, some of it's paid at 40%. And because it's over 120,000, some of it, in total, some of it's paid at 45%. And £30,000 of it is tax-free. I haven't got a problem. But what that final pay slip does not take into account is that now I've lost the £12,570 personal allowance, which I've had for the previous 11 months. So now the tax office are basically saying, oh, that £12,570 personal tax allowance that you didn't pay any tax on because you didn't have to for the last 11 months, because your total earnings, so my salary plus my final redundancy amount, has taken me above the 125 grand threshold, you now have to pay tax on that first 12,570. And here's the double whammy. You have to pay it at the higher rate. So not only are you suddenly losing a tax-free amount, you're having to pay tax on that at the 45% rate. There's this strange anomaly that basically means that almost between 100 and 125,000 pounds, you're paying a 60% tax threshold. There's no 60% here, but that's what it works out at. I've got this lovely little explainer here. If you're lucky enough to earn near £100,000, £99,000, and then you get a pay rise, you could be potentially worse off. That's the great anomaly here. I mean, look, I know it's not going to affect that many people. You either earn like 125,000, 150,000, or you earn significantly less than 100,000. But if you're in that position, whether salaried or because you've taken redundancy or whatever, and it takes you over that 100,000, you have to be aware that you start losing your personal allowance. Now, this is quite a common thing within accountancy circles, apparently. So people know it's called the 60% tax trap. So this is really, again, for people who earn over £100,000. So for instance, here, let's imagine you earn £110,000. So you're £10,000 above the threshold. You would not only pay £4,000 in the higher tax rate, okay? So the higher tax rate being 40%, yeah? But you'd also lose £5,000 of your personal allowance because it's £1 for every £2 over the allowance, okay? So you lose £5,000 of your tax allowance. And with £5,000 of your personal allowance gone, that proportion of your income now is subject also to the 40%, costing you another £2,000. Therefore, of that £10,000, you only get to keep £4,000, which means you're paying £6,000 in tax, which is the 60% tax rate. So it's an actual thing, ladies and gentlemen. I hope that makes sense. But basically, by losing your personal tax allowance after £100,000, you effectively end up paying the equivalent of 60%. There's no 60% here in the tax rates, but this is known as the 60% tax trap. For most people, not a problem. Not many people earn over £100,000, and good luck to you if you do. But if, like me, you did not earn over £100,000, but then you took redundancy, and therefore your income for that year takes you above that threshold, even though you've paid tax through your payroll quite normally, quite legitimately, and so you don't think there's any other tax because you don't have to do any self-assessment, you could be hit with a bill for that lost 12,750 personal tax allowance like I have. And 40% of 12,750 is around £5,500. So yeah, completely unexpected. Now I know what I've had people say, oh, you should have, got your company to pay your redundancy in the next financial year. As I said, that wasn't going to happen. They want to write that bad debt off in that financial year. I mean, it was a bit tight, but they certainly made sure I got paid on the 31st of March. They cut it fine, but the point is they had to make those payments in that financial year. Also, some people said, oh, could you have arranged for your company to make the redundancy into your pension fund and save tax that way? No, that wasn't an option either. It was take the money, and that's the only option. And the money had to be taken within that financial year. But as I said, I did all the maths. I did not see that anomaly. I'm not an accountant. I'm not a tax expert. And it is an anomaly. I ran my figures past a personal tax advisor, a financial advisor, and they just looked at it and they went, yeah, I think your calculations are roughly right, which gave me the confidence to make the decision, at least confirm the decision I made to retire was based on the right calculations. And now it's too late because now, you know, I'm 3-4 months into retirement. I hadn't calculated for an extra 5.5 grand in what's already quite a tight kind of, ooh, by the skin of my pants retirement decision. So yeah, lesson to be learned. If you are taking redundancy and that redundancy plus your annual salary takes you over £100,000 in that financial year, beware. You could end up owing tax to the tax office, even if you've paid tax through your payroll and pay as you earn like any normal person. So it's just a warning to be aware. And now I've got to find £5,000 from my savings, which I'm sort of depending on for my sort of retirement plan, to pay the tax office by January next year. So yeah, a salutary lesson. Should I have known? Possibly, but it's such an anomaly, such a kind of a weird thing that even my financial advisor didn't pick up on it. So yeah, I do my research. I would like to think I'm a pretty intelligent guy. You kind of rely on the fact that when your tax is being paid through the payroll, pay as you earn, payroll is taking care of the tax. And it's not payroll's fault. They were taxing me correctly every month because I was earning, my salary is less than £100,000. So all the tax calculations every month was correct. It's just that last month when I had the redundancy paid, that it took me over that crucial 100 grand, 120 grand mark. And that's where the anomaly kicks in. And that's where basically I've been kicked in by the tax office. Nothing you can do about it. I can't appeal. It's not a mistake. No one made a mistake. It's just a horrible, horrible anomaly, which I wish I'd known about. But it is what it is. I'll sort it out. But anyway, hopefully this has been a salutary lesson. And if you are in that situation, if you are considering redundancy, you have to take on board whether that redundancy amount takes you, even with a 30 grand tax-free allowance redundancy, which effectively is a nonsense if your redundancy is taking you over the 125 grand mark, because that 30 grand tax allowance is no longer 30 grand tax allowance. If you think about it logically, you instantly lose 12,750 of that tax allowance. So suddenly now your tax allowance is what? 17,250? Point is, it's not a £30,000 tax-free amount, is it? Suddenly that tax-free amount is only, 16 to 17,000 pounds. So yeah, just be careful. If the amount of your redundancy plus your earnings, your salary in that year add up to more than £100,000, because you could also be caught out and could potentially have a bill that you're going to have to pay from your retirement funds. Anyway, there you go. I hope you found that useful. I hope you found it helpful. If you did, then please hit the likes, because I like it, YouTube likes it, and it helps people like you find content just like this. And if you're new to my channel, then do me the great honor, please hit that subscribe button, toggle that notification bell, and that way you'll know when I go live with content just like this. Thanks for watching.